Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Monday, October 14th, 2013. Well, a continuation of the trend to the upside today. The candle we're analysing is this second last candle here on the chart, and a doji type candle. A candle that's made a higher high and a higher low, continuing the trend to the upside. But we don't have a lot of faith in the potential for this trend to continue to the upside. There's basically no body to this candle, so it means that neither side has made any bullish nor bearish progress on the day between the open and the close, and that's in contrast to the previous day's trading, where we had a white bodied candle and the buyers made an amount of net bullish progress. Even though it was a small amount, we did see that the buyers were making an attempt to build momentum to the upside. Prior to that, we had another doji type candle that set the market up for a change of trend, and that was confirmed with that day's trading. And on that candle we saw strong price rejection from above the 135.49 level. Now importantly, the market has managed to close above the 135.49 level that has held as resistance, but with this being a doji type candle, a candle of indecision, there is very much doubt about the continuation of this trend. The market has tested above the Tenkan-sen and failed to close above there, so the Tenkan-sen is acting as important resistance for the second consecutive trading day now. So what we'd like to see to give us a bit more faith in the potential for the market to trade to high levels is a close above there. And it would be better if we had a bullish close above there too, to give us a bit more faith in the market's ability to trade higher. By the same token, however, we have seen the market rejected from the 135.49 level now for today's trading, and rejected from above there for the previous day's trading, and now holding as support for today's trading at that 135.49 level. And already for today's trading here, as this current candle as it's developing in the new trading session, we are seeing rejection from there in the area holding as support. So moving forward, that will be an important level if this trend is going to change to the downside. Looking in the recent past, it has been fairly strong resistance, then support, now resistance, and now support. So it is a very, very important level. If we do see the market break out to the downside, and if we do see a bearish close down below there, we could see the market testing down to the 134.85 level, and that has been a very strong level of previous support in this market. But crucial to this market really for the next trading session will be the area around the Tenkan-sen, and if we can close up above there in a bullish manner. Looking at the recent trading history here, however, in the zone extending up to the 136.14 level, we've seen the market testing up there for quite a few of the trading days over the last couple of weeks and being strongly rejected from there. So there is a very, very real possibility, based on the fact that we have this doji candle in an uptrend, a very real possibility that the power of the buyers may have evaporated and a possibility of a change of trend to the downside. So we are looking for a potential lower high and lower low. Now in terms of the Fibonacci extension, and here we've seen today the market testing exactly to the 161.8% level and being rejected from there in a very strong manner. So an uptrend where the buyers are failing to take control, they're not making any net bullish progress on the day between the open and the close. This really does set the market up for that change of trend to the downside. And in terms of the Fibonacci retracement, testing above the 78.6% level, almost to the 100% level, being rejected from there, failing to close above the 78.6% level on a very indecisive candle, suggesting a strong possibility for a change of trend. In terms of Ichimoku, a bullish market in all three timeframes. We see the market trading up above the cloud here and a fair way above the cloud, so it wouldn't surprise to see the market test back down to lower levels, but certainly no strong indication of that yet, based on the very solid support that we have just below where the market's trading. In terms of the Kijun-sen, a bullish market in the medium term time frame, with the market trading above the Kijun-sen, the pink line, and looking at that line for the Kijun-sen, it is starting to point up now, reflecting the market making a higher high and higher low here, and suggesting that the market may trade to higher levels, and there is some solid upside momentum in this market from the buyers. In terms of the Tenkan-sen, however, for the fourth consecutive trading day, we've seen the market fail to close above the Tenkan-sen. The market is trading below. They're giving us a bearish market in the fast-term timeframes, but we are trading quite close to it, and we now have seen the market find equilibrium in that fast-term time frame, and whereas the market was finding support around the Tenkan-sen, it's now acting as resistance. So the Tenkan-sen is really quite crucial to this market at the moment. If we see a bullish breakout up above there and a bullish close up above the Tenkan-sen, as I've mentioned, we could quickly see the market testing to higher levels, but this market really has very strong resistance overhead in a zone extending from around this 135.79 level, even lower, from probably around the Tenkan-sen up to about the 136.14 level. Very strong support from about the 135.49 level down to 135.34.85 and down to around the 134.60 level.